Today we're diving into a topic that everyone can benefit from: investing. I know a lot of people that do not know anything about investing, and if they'd have started sooner, I know their financial journey would be a lot smoother right now. So let's get into it. Hi everyone, welcome back to the channel. If you're new here, my name is Alice, a chartered accountant, and I'm all about helping you with all things personal finance with a little bit of personal development thrown in there. Whether you're just starting out or you've been thinking about it for a while, this video is for you. Let's build some wealth. It can be frustrating that the rich stay rich, the poor stay poor, and that's how the system's set up. I'm passionate about teaching you how to invest, how to grow your money, especially if you're a woman, but also men are welcome here too. And I want to help you all be the best versions of yourself, but especially grow your finances because you deserve it. Okay, first things first, why should you start investing? Investing is one of the most powerful ways to grow your money over time. If your money is sat in a savings account, you are literally losing value. Even if you have a 3% interest rate, inflation has been hovering around 7% recently, which means you are losing the value of your money at 4%. In order to keep up with inflation, you need to be investing in the stock market. This is growing on average about 10% a year, so you are just beating inflation. Thanks to compound interest, your small contributions can make a significant difference over time. It's not just for millionaires. So let's break down how to get started, what apps you should use, and how much you need to get started. Choosing the right investment app. One of the easiest ways to start investing is by investing with an app on your phone. There are so many apps these days that you can use. You can even use banking apps such as Revolut. They have an investing function. You can invest in crypto, you can invest in index funds, but these are my recommendations for investment apps. First of all, you have the traditional investment accounts, which are more like online portals. We start off with the traditional investment houses. Vanguard have their own portfolios. Vanguard has some pretty good commission and fees. So this is a great option if Vanguard is available in your area. In the UK, or if you're from the US, I would really recommend Vanguard or Fidelity. However, if you're from the rest of Europe, getting a Vanguard account can be kind of tricky, especially for Spain. So I don't use it because I'm based in Spain. But if you're in the UK or the US, I definitely recommend Vanguard. I personally use eToro just because that's an app that I found. I feel like the interface is really easy to use. They also have an education and training part on their platform, so you can learn how to invest, you can learn about the market, you can learn about different investments, and that's all free. Also, eToro have an ISA. So if you're in the UK, you can have an ISA. This is basically tax-free accounts. The first £20,000 that you put into an ISA is not taxed. Well, the gains are not taxed. So I really recommend using an ISA if you're in the UK or the US, but again, I am not based there as a resident, so I cannot use that, unfortunately. And Trading 212, they both have ISAs. They're both great platforms. They both have good interfaces, and you just download the app, create an account, you answer a few questions, and you're signed up, and then you can start your investing journey. Okay, how much should you invest? If you're a beginner, start small. You do not need thousands to invest. You can literally invest with £10, €10, $10. Okay, so this might depend on your financial situation. So if you have a lot of debt, some people recommend holding off investing until you've paid off the debt. Some people recommend investing if the return is a higher percentage than the debt. If you have debt that it has an interest rate above 10%, you should pay that off first. But if your debt is below 10%, I think you still should set aside a proportion of your income to invest. If you have significant debt, like credit card debt, I really recommend paying that off before you invest. But if you have something like a student loan, I would still invest, because I know some folks in the US might have 100K of student loan. I really wouldn't hold off investing until you've paid that off, because that could be years of gains that you're losing. For example, in the UK, our student loans is not a real debt. It's a very complicated story that I'm going to say for another video. Just look at your financial situation, and if you think that investing is a good idea for you because you don't have any debt, or you have small debt, or your debt is at a low percentage, then definitely start investing. Also, remember to have an emergency fund. So it's really important to have 3 months of emergency expenses. I would say personally, if you don't have kids, you don't have pets, you're renting, you can start with 1 month emergency fund if you have a stable job. And then I would start investing whilst building up that emergency fund at the same time. Set a budget. I recommend putting aside 10 to 20% of your income each month and invest it. Again, as I said, if you have no emergency fund, if you have debt, you may need to proportion some of that towards those things. But if you can invest 5 to 10%, 10 to 20, the maximum possible to get the best returns, I would recommend doing so. If 10 to 20% feels like too much, even $10 a month can make a difference. Okay, start with fractional shares. So you are not going to need to pay $300 for a Google share. You can just put $20 in and you will own a small part of Google, a small part of one share. All these apps let you do this. Okay, step 3, automate your investments. So you can set up an automatic deposit into your app each month straight out of your salary. So no thinking, there's no, oh, but I want to buy this month, I'm going to do that instead of investing. No, it happens every month, and an automated investment plan is the best way to set yourself up for success. Okay, what do I invest in? Okay, so it might be tempting to jump in at the deep end and go straight into buying Google, Facebook, well, Meta, and all these stocks that have done so well over the past, but I think it's more risk averse. It's a better idea, especially when you're starting, to start with index funds. So the most popular are the S&P 500, which is the top 500 companies in the US, the FTSE 100, which is the top 100 companies in the UK. You also have other ones like the ESP 35, which is the top 35 companies in Spain. You also have emerging markets index funds. You have index funds for almost anything. You can have index funds for real estate. You can have index funds for cryptocurrency nowadays. So I will give you some of the ticker symbols that you should invest in on these apps to get started. So VOO is the S&P 500 Vanguard Index Fund. So a lot of different companies will track the S&P 500 index in their own fund. So there might be a lot of S&P 500s out there. Make sure you do not get an CFD if you have eToro. This is a mistake I made. I traded and bought with CFDs, which is contract for difference, and that has extra fees. So I paid a lot of fees from eToro at the start, which I didn't mean to. So yeah, just make sure that you invest in index funds that are not CFDs. Index funds and ETFs, diversified portfolios, and they are low cost for you. I'll explain the difference between an ETF and an index fund later, but that's not something you really need to know to get started. I would just invest in the S&P 500, the FTSE 100, maybe the NASDAQ, some really popular indexes. I will link them below and you can get started. Okay, if you want to invest in individual stocks, you can also do that. I don't always recommend investing in individual stocks, but if you're young, if you're in your 20s, 30s, 40s, you can still have 10% of your portfolio in these individual stocks. 10 to 20% is recommended. I personally invested in Meta about 2 or 3 years ago, and I think I put about $250 in there, and it's now worth over $1,000. So I wish I'd done more, but again, it's a risk. I also put money in Virgin Galactic, and that went from $30 to literally 20 cents. That's why I say invest in index funds, because it's low risk. Lower return, but it's still a decent return for the amount of risk that you're taking on. Also, retirement accounts. This is another form of investments. If you're in the UK, workplace pension, get that done. Your employer is giving you free money that is getting invested for you. I also will go to make another video about pensions, because you can actually choose what you want that invested in based on your risk profile. And if you're in the US, look into an IRA or a 401k. Okay, tips for beginners. Number 1, start now. The earlier you start, the better your returns will be. The more time your money has to grow. Number 2, be consistent. Invest regularly, even if it's a small amount. 3, avoid emotional decisions. The market will go up, the market will go down. Do not panic sell. The best time to buy is when shares are low, but you cannot time the market. So instead of time the market, it's time in the market that is important. 4, educate yourself. Learn the basics of investing and do not worry about asking other people for advice. Watch YouTube videos, watch my videos, read books, and educate yourself. However, if you don't have time to educate yourself just yet, throw some money in an index fund and I promise you won't regret it. Number 5, and a really important point, is dollar cost averaging. But instead of putting all your money in at once, you decide to put that money in little by little over time, like every week or every month. This is really good because when the price is high, you're buying high, but when the price is low, you're buying low. So if you're investing incrementally over time, you are buying at an average price. So you are not losing out when the price is high, but yes, you may be losing a little bit from when the price is low. Over time, this averages the cost of your investment, reducing the risk of buying all your shares at a high price. Let's say you invest $100 every month in a stock. Month 1, stock price is $10, you buy 10 shares. Month 2, stock price drops to $5, you buy 20 shares. Month 3, stock price rises to $20. You buy 5 shares. In total, you've spent $300 and you own 35 shares. The average price you paid is $8.57 per share, even though the stock price went up and down. So there you have it. Investing doesn't have to be scary. It doesn't have to be complicated. With just a few dollars and the right apps, you can invest and secure your future and grow your money over time and beat inflation. Let me know in the comments if you found this helpful, what app you're going to use. If you want any tips, leave comments below. I will respond, and I'll see you next time. Bye.